Hi guys, welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka.
And I'm Yatin, Mota.
Yatin, what would you call this correction? Midweek blues or beaten black and blue? Should we say that?
It's black and blue, at least for the, banks today.
Yeah, completely.
The broader markets, Nandita was broadly stable. But yes, the NIFTY Bank as well as Nifty, because of the, HDFC Bank's quarterly earnings, I think the reaction was quite sharp today.
Yeah, that's true. Yatin, if you look at the Nifty, I think we've logged the biggest, fall in a year, so to say, and broken below that 20 DMA of 21,622 or thereabouts. That's a crucial level to watch. And after clocking in 22,000, we were thinking whether or not, where will this rally stop? But, this is the kind of correction which I think, most of the participants were really waiting for to get into, the market, and look at the bank Nifty shaved off 2,000 points, a 4% cut coming in. All the 12 stocks on the Nifty Bank index ended the day with losses, even sectorally. Other sectors like metals, all the other sectors, PSU banks, all of them were in the red, barring the IT pack, that managed to outperform in a weak market. And of course, as you mentioned, HDFC Bank, I think erased a market cap of somewhere around 1 lakh crore today itself. 9% kind of a downtick coming in. Really a bloodbath, so to say. And just recounting the losers today, aside of HDFC Bank, you had the likes of Tata Steel, Kotak Mahindra Bank, Axis Bank, all the private banking names and metal names also. 3.5% kind of a downtick coming in on the metal index. Gainers were few and far between. As I mentioned, Tech Pack, HCL Tech, TCS, Infosys, Tech Mahindra, they managed to hold out, and so did SBI Life. That was among the gainers. But let me also, let's get an expert opinion as to what to make of the kind of correction that we saw today. So let me bring on board Prakash Diwan, market expert. Prakash, great to have you on the show. Thanks a lot for joining in. I reckon you are in Rajasthan, must be really, really cold there. And today, even the bulls got the shivers, given the fact that we saw, Nifty falling below that 21,600 mark as well. But, what do you really make of this correction? Do you think the bears are out of hibernation, or do you think it's too early to call it a bear hug? And it's just the kind of correction that one should utilize to buy into the market. What is your own sense?
Good afternoon, Nandita. Good afternoon, Yatin. So, you're right. The bears have been out of hibernation, but I am in the midst of that winter. So, I wish I can hibernate. It's quite strange. The market was giving very clear indications of a little bit of a stretch on a lot of counts. But the last spot that you expected things could kind of correct was the banking pack, right? I mean, here we were talking about banking making new highs, and there's so much positivity around it. But then this is specifically HDFC Bank's behavior after the earnings last afternoon reminds you that, the market will always wait for a trigger or needs a trigger to kind of remind us that things can't keep on going up and away, right? So that is precisely what's happened. Now, the first 250 points of the Nifty having been lost, and, the market was trying to find its feet around. After that, the next 150, 200 points is a matter of more of a push to algorithms and rule-based trading, or whatever you want to call it. But I think we should understand that the markets also were in a spot where, there was so much of large cap names large cap orientation that was being advised. Whereas actually, if you see the mid cap, small caps have actually held up, so it tells you that the market is going to be a bit choppy. It's going to be volatile. Result season is never ever a smooth ride. You saw how IT responded positively, but then how stocks are responding negatively on the banking side. And because of HDFC Bank, there's an expectation that there's something wrong with the systemic pressure on NIMs. And if margins are going to completely be like this for all the other banks, you can imagine what happens. But I am a believer that these are opportunities you get to buy into good names, good sectors, good teams. And you should never get so worried if you're a long-term investor. Yeah, if you're a trader, of course, you've been beaten black and blue, and all that sea of red is really worrying. But I don't think we are in a bear hug, to answer your question specifically of that sort. It's not that we are capitulating on any count. Of course, things look bad when they are bad, but then when you look at there are lots of pockets of positivity as well that still emerge and could likely emerge in the results.
Hi Prakash, Yatin joining in the conversation, and when you spoke about mid caps, to my surprise, there was nothing, in terms of panic, especially in the small cap universe or the mid caps which already run up.
Exactly.
Probably, in the last few days, we saw a lot of brokerages talking about as to how mid caps are expensive over the 10-year averages and, standard deviations, so on and so forth. As an investor, do you think right now, we are running a risk of a mid cap correction that could follow the large cap correction? Because, there was no panic as such, no profit taking. Do you think right now, given the fact that most of the large investors, HNIs are sitting on ideas and, probably no cash to deploy, you think mid-cap correction could be imminent, or probably, there could be some stock-specific reaction depending on the earnings season?
No, that's a very valid point, Yatin. What do people do now onwards? I mean, you've seen the carnage thanks to HDFC Bank and across, all the other banking names. But more importantly, you need to understand that what's changed within the mid cap, small cap space, if I will, it's the number of choices you had is reduced. Now, let me give you an example. You had Polycap, which went through, which was in a tizzy a few days back. But then things started looking up. People were interested in even bottom fishing out there, and so is the case with the other cable companies. So you will be governed completely by how earnings pan out. So to answer your question specifically, is there a mid-cap carnage, mid-cap sell-off that's kind of imminent? I think in certain pockets it is, especially the micro caps and small caps, which have been running just on the basis of expectation and fueled by the FOMO that's so strong. But I think if you look at quality small cap, mid caps, which have a very robust business model where earnings are still likely to be much better than what they have been all these years, thanks to so many various factors, which I don't want to get into, but very specifically, it will be very stock specific. It will be stock specific to the extent that on a day, you'll probably have all mid caps melting down, and you'll probably have some which are still in the green or probably, on upper circuits as well. So, I mean, today, we know certain stocks were at 5% upper circuit in spite of, the market being where it was. So, mid caps will be very stock specific. I don't think they behave in a similar way on sectoral basis. But just to give you an anecdotal data, as we go closer to 550, 600 or 52-week highs, there's always a bit of a shakeout in the market. The market doesn't oblige by making that number go to 650 and 700 and all. So that's exactly what happened. So you will see all of those positions being loosened up or lessened out as I said specifically where valuations do not justify the kind of price that some of these small cap companies prevail. So there could be, yes, a sell-off. But again, if your stocks are good, I don't think it should be bad.
Right. From an earnings perspective, we've already seen the celebration play out in terms of large cap IT. From the mid-cap IT pack, L&T Tech reported numbers. Although revenues were disappointing, they've maintained their revenue guidance, and that's why I think the stock held up somewhere around 4% or thereabouts today. So, from the mid-cap IT universe, would you look at the likes of, perhaps an L&T Tech or a Persistent System vis-a-vis the large caps? Because these stocks have run up quite a bit, and as you said, be a little selective when it comes to mid-caps, right? Do you think, the mid-cap IT names warrant a look at the current juncture?
So, Nandita, again, on a bottom-up basis, for example, if you look at an Infosys, which has a significant share of BFSI, and there's this whole, talk about BFSI being or seeing green shoots or turning around, you add a little bit of that flavor coming in. So you will look at Cyient, how it behaves is very different than what a lot of the other. I think if you look at the likes of Sonata Software or to a large extent even OFSS, Oracle Financial Services. So if BFSI is going to do well, fintech is going to make a comeback, there's acceptance, weeding out, whatever you want to call it, some of these names will do well. There's no doubt. But again, none of the companies or mid-cap IT companies are only focused onto one or two verticals. They're spread all over. So it's going to impact them. What's undergoing right now, thanks to Infosys, HCL Tech, TCS, Wipro flagging office, a relook at that sector. So it's a tactical play. It's a tactical play. We really don't know how it will pan out, whether this is more secular and for the next couple of years. But yes, for the next couple of quarters, some of the mid-cap names, NIT, as I said, Cyient, Sonata, they definitely will probably offer more promise than what they did, let's say, 3 months back.
Right, Prakash. Prakash, talking specifically about mid-caps, few of the sectors moved quite well. Obviously, we have the PSU, banks, the defense companies, be it private sector defense companies or, PSU defense companies, railway stocks. A whole host of this theme was doing well in the marketplace. still all of these stocks are holding out. Obviously, in terms of valuation, everything is expensive. But do you think from here on, the theme still remains railways, defense, or all of these stocks which have shown some strength or promises of growth moving ahead? Or do you think, again, there could be some other opportunities, probably in the renewable space, some, PLI manufacturing space, or as you mentioned, polycab, like consumer goods stocks which are moving well, or, delivering good growth?
So, it's probably difficult to, paint everything in one brush. But I think what's likely to happen is that the underlying segments will continue to grow. Given the fact that the government is very focused on spending and creating capacities within railways, power, renewables, all of those, I don't think there will be any issue related to, businesses not doing well. So what could change? What could change is the names of people names of companies that are participating in that, right? So, and that is more from a valuation perspective, it could probably start looking different. I would believe oil PSUs are still undervalued. Oil PSUs still offer a lot of promise from a valuation comfort, from a business comfort. So you could definitely look at some of these opportunities as well.
Right. I want to get in your thoughts on an MRF, Prakash. Today we saw a sudden spike in the stock, and it hit that 1,50,000 mark briefly though, and ended the day in the red. Any triggers here, MRF? Any thoughts?
Honestly, not. Today we were looking at, and it's sort of ignoring things that was falling sharply, to be honest, because there were so many of them that you couldn't probably cover. But I'm sure there will be some explanation that will kind of justify that. I would not be in a position to explain why this happened.
All right, but let's talk about an LIC as well. It surpassed the market cap of SBI, although briefly. Yes. But there were concerns about market share loss to private players, and of course we saw a very strong pullback coming in Adani shares also, right? And that also aided LIC, right? But going forward, do you think the concerns over market share are a thing of the past for LIC at least?
So I think what's worked for them is a couple of triggers. One is the product mix has been a bit more favorable, as it's been reported. Contribution coming from non-par has helped margins make a comeback after a long time. Secondly, you also have the fact that it's sitting on that one-time, income that's come in through that refund of sorts. Even if, some of it goes away in the higher tax liability, which probably happened, by March, you'll probably have this as distributable dividend for this. So, and remember, there's always a float advantage that also LIC has. So, it's minuscule in terms of what's available for people to kind of allocate to. But I don't know, I don't think the business trajectory has changed dramatically. If you really want to know that from my perspective, I think the private sector still has enough firepower in terms of keep on marching ahead, where LIC, of course, has its own strength and is re-engineering itself to grow. So there would be growth vectors for both segments, for LIC and the private sector. But LIC probably seems to be back in the reckoning because all that disappointment and selling related to the IPO, post the IPO listing and all, is probably over. So there's no overhang in terms of more supply coming through. And that's one of the reasons why, from a longer term perspective, it will start showing much more promise than what it did 6 months or 8 months back.
Prakash, last question from my side. With respect to the markets, we have a lot of young investors coming into the market, a lot of new demat additions, a lot of new investors which have got connected in the market. Obviously, the Moneycontrol app also has been used by more than 6 million people now. One, sharp question. Right now, if the market were to fall, what is the advice to these new investors? Do they stick to the Nifty ETF? They probably invest there, or they look at mid-cap funds, or they look at direct investing. What typically would you like to advise all of these young viewers of ours in terms of the market fall and how to really capitalize on this good opportunity?
Yeah, so first and foremost is they should. I mean, there's going to be some of them will learn this for the first time and difficult to explain, but don't try catching falling knives, because you will see a lot of them happen in the course of the next few months. We are at a stratospheric level. From there, a lot of things are going to fall, including these knives. So one is, don't try to catch something just because it's lower, dramatically lower. That's one. Second, from a longer term perspective, if you calibrate your investing through SIPs, whether whether the destination is small cap or a large cap ETF, really that might not matter so much in the long run, as long as you have discipline in your investment. So I think first and foremost, people have to learn, the youngsters have to learn that while they have a lot of access to information, it is the knowledge and experience which takes time. So don't pay the price to convert that information glut into knowledge and wisdom, right? So, what I'm trying to say is not that we are wise enough. We are still learning as well, but it's just that too much information at times gives you this false delusion of being in the know of everything, and you keep on making decisions around that. So that's what you don't need to do. But I think you could look at ETFs at levels where things, at lower levels once indices correct themselves. Right now, it'll probably be better if you go through the professional fund managers on the SIP route, irrespective of the market capitalization that you choose.
Absolutely.
All right, that's advice coming in. I'm afraid I think we're running out of time on that note. With that, Prakash, thanks a lot for taking our time and sharing your thoughts and advice with us. We look forward to touching base with you sometime soon. But with that, I think we leave it at there. Yatin, below that 21,600 mark, we'll have to see how we open up tomorrow morning, given the fact that, even global cues aren't all that encouraging.
Correct.
China GDP below estimates. You saw Wall Street, weak last night, and Asian markets also selling off, right? So we'll have to see how things really shape up tomorrow morning. But beaten black and blue, but we are leaving it at that. At the juncture.
But I think Nandita, one important point that Prakash mentioned for all of these young investors and the new entrants to the market, probably who have spent only 2, 3 years, 5 years in the market, that don't try to catch a falling knife. Systematically invest your funds and wait for an opportune time. It's not that today the market has corrected, you go tomorrow and buy the market.
It's probably difficult to time the market. That's what
you need to probably systematically start your investments, be it through SIP, professional investment funds, firms, or when you're directly also trying to invest. Probably think and be patient when it comes to the entire investment and trading process.
Also he said that it's better to take professional help rather than going out and acting on the information that you have single-handedly.
Absolutely.
Right, with that, it's a wrap from us. So thanks a lot for tuning in. If you have any comments, leave them in the comment section below. And of course, come back and join us tomorrow morning at 8:30 a.m. When I come back on Morning Trade, and we'll try and take up all your stock-related queries as well. So if you have any queries, you'll of course have to send it to us as the show is live at 8:30 a.m. But with that, goodbye. Have a good evening, and of course, see you tomorrow. Yatin and me saying goodbye. Stay tuned to Moneycontrol for all your other news and updates.